Welcome to Trading Lounge and the European indices for the 3rd of February. And starting with the DAX here, we'd been looking for this particular move down through here as wave 4. And we're also looking at this in terms of the S&P 500 as well. So let's go in and have a closer look at this. I think we may be able just to go to the hourly chart here. So in this instance here, I'm looking at this as an A and a B and a C for the A wave here, then a B wave here, and then 1, 2, 3, 4, 5. Now I also understand that we could count this in more of a bearish situation as well, and we can have a look at that. But the reason I wanted to stay with this 4 is if we have a look at the S&P 500 for a moment. With the S&P 500, we've got wave 3 here, and we're looking for an A wave, an A and a B and a C for the B wave here, and then we're looking for 5 waves down here into 3200 for wave C or 4 here. Now, I know this is a wave 4, and I know that wave 4s can get complicated, so this may not be the correct count. What I can see so far is this 1, 2, 3, 4 here and 5 down to this point here where we'll take profit. So if we've got a little wave 4 and a little wave 5 to go in through to here, then that would be the same as this one here. So a wave 4 and a wave 5. So at least we can get to that point with this. Okay, so once we get to here, this will be roughly the 38.2% retracement area that we're looking at here for this wave 4. So this would be so let's just get to that point there first. In the bigger picture for all of this is that if I drag over the Germany mid-cap here for a moment, so this mid-cap's the top 50 here. So like the DAX, we'd been looking at a wave 3 here and wave 4 here, and then looking up here and 5 waves are up for 1 and back for 2, and going into the 3rd wave here, and then a 4th and a 5th wave going in here. So that's cool. The other way to look at this is an expanded flat as well. So an expanded flat would be, this would be the move up to the top here for this one here, to that top here for this one, the pullback here for wave A here, and then an A and a B and a C wave up here for the B wave, and then taking the top out here, of course, and then also to the wave C coming to the downside here would also take out this low here as well. It's an expanded flat because it expands. It takes the top of this one out and it's a trap, and then takes the bottom of this one out, which is also a trap, and then moves up from that point. So we could have that going on in the market still. I don't know if that's the case, but yeah, we need to kind of consider that as well within all of this. If this ends up extending even further down than this particular low here, then we'll need to look at that. So that would sort of look a bit like this here, like a big ABC going up to this particular point here, probably 1 degree smaller actually, and then having a larger move to the downside here. So I just thought I'd chuck it on the table, but we just got to go step by step first, you know, to see what we're actually looking at here. Then there'll be a 4th wave and a 5th wave here, but for the time being, let's just look at this as wave 4 here and wave 5 here. Once this one lands here, we'll be able to see if we get some sort of corrective pattern here, then we'll look to go short at that stage. But we want to gather the evidence and yeah, and just stay with the evidence really, and this is how we'll handle it, I guess, you know. I mean, one of the things that concerns me about the S&P 500, and we've had looked at other counts as well here, but see the video for that, is just the speed in which this is coming down from here, because it's just as fast as the A wave, and normally in a C wave we would see this on more of an angle here. So we'll see anyway. We'll just, all the same here as well, we'll get to the bottom here and we'll just start to look at the rally here in that instance. Yeah, so that's the main point there. So at least I can say to you that we've got the wave 4 rally back and then down again here for this. Do I have that on the 15-minute chart? Yep. So basically what we're looking at here is wave 1 and 2 here. Then all of this is the third wave coming down here. So in a nutshell, we can come back up to the 38.2%, but basically what we're looking for here is a simple retest of the 13,000 here, which is a major trading level. And then we can look to, like I said, we can look to go short in different ways. So after this rally, you might be wanting to hold through this and so on. So there's a couple of ways to handle all of this. We could put, wherever that B wave low comes in, then that would be the safe trade to the downside here. That would be the safe trade here at that point. Depending how low this comes, if there's enough space to grab that low here and this one here, then that would also be there. It would be nice if it just pops its head above the 13,000 there. It would be something like this here. And then if it fails to hold, then it'll create that there as a retest, and then you can short that particular one at that point there. It's pretty sure that we've got 1, 2, 3, 4. So the other thing you could do is you could really just sell it at the 38.2% retracement level if it got that far. Yeah, so that's that. And the FTSE is in a weaker situation. So just on the intraday chart here first, it's the same thing again as well here. So we looked at going short below this low here last time we spoke, because any breach of that would negate the count that we already had, because we were also looking at it as 1, 2, 3, 4 and 5 to this point, but it only rallied and moved back down, and that's why we thought that out and we could go short here. And once again, we can see that we've got 1, 2, 3, 4 and 5 here for the third wave. So once again, we'll get a rally that could come back to the wave 4 of 1 lesser degree here. Once that's in play, then the number 72 here is where we'll take profit for this particular trade. So we'll hold it through this one and then down into the 3,200 if you haven't already taken the money off the table, which being Friday, it would have been the right thing to do as well, or at least take a chunk of it at that point. But anyway, we'll just play this out here. In the bigger picture here, just check the 4-hour chart. Let's go to the daily chart here for a moment. There's a couple of things I want to talk about here. It's in more of a weaker situation here. So there's a couple of things. We could look at this here. All of this here now is beginning to look corrective. So we can look at this here as up for wave 1, an A wave here, a B wave here, and a C wave coming down through to here. So we're looking for 5 waves in this sequence here. That would bring us back closer towards, well, we're only trading to the 72, but there can be space for further downside here as well. So, but this here, because of this move down through here, this overlap here is not such a big deal, but overlapping this one here is a big deal. So it puts it in corrective mode. So we can either have it coming down here as an A wave here, then an A and a B wave and a C wave for the B wave here, and then a larger 5 waves coming down to 6,500 here. So that's also possible as well here, because we're starting to get overlapping wave structures and calling this corrective here. So I need to do a bit more work on this, but there is potential here for more downside, well, in all of the indices actually. So we just need to be a bit mindful, but we'll take step by step, and we'll take advantage of what we do know and stay away from what we don't know. So what we do know at the moment for this is that we're tracking from this here, we're looking for 5 waves down here as 1 and 2 and 3 and 4 and 5, and we'll take the money off the table here, and then we'll observe not only what the European markets are doing, but also the US markets. Alrighty, thanks for tuning in. Cheers.